Welcome back, and joining us on the show now is Carlos Mera Arzeno from Rabobank. Carlos, hi, good to have you. It's early morning for you, and thank you so much for joining us on CNBC-TV18. I want to start with some of these industrial agriculture commodities. So whether you look at coffee, which has seen some strength today, but a very sharp decline is how we are dealing with the palm oil prices, down 5% right now, down 50% now from 2022 highs. What's your sense on both of these?
Well, I guess it's a dominant story nowadays in the markets, and that has a lot to do with recession and increasing reference rates across the world. And the expectation of a recession, of course, influences some commodities more than others. Of course, the industrial commodities and of course, palm oil is used in biofuels quite a lot, a little bit more affected. And also the luxury commodities, when it comes, for example, coffee, we can argue, but certainly cocoa has been affected by that expectation of a recession, because as a luxury item, the demand side is going to suffer relatively more in a recession scenario.
Carlos, also, when I look at the cotton prices, we are at a one-year lows onto this one as well. The weak global demand, and as you said, the recession fears, hike in interest rates, strength in US dollar, all of that seems to be weighing on this one too.
Yeah, I think to some extent. Of course, we had disastrous U.S. crop conditions for cotton has been really adverse, as well as in a number of other commodities. But the demand side for cotton garments will suffer more, and that will, of course, be in favor of cheaper artificial fibers.
Carlos, I just want to, rate out on what the commodities have done from the highs of this year. So when you look at cotton is down 43%, palm is down nearly 50%, rubber is down 27%, soybean is down 22%. Would you say that the inflation concerns that we were talking about in the previous quarter are no more there? And from here on, what is the view that you would want to take for many of these soft commodities?
It's very hard to have a view, because certainly in some commodities you still have a bullish story. I mean, for example, if you look at the commodities affected by the war in Ukraine, I mean, the war now looks longer and more severe, with the potential annexation of part of Ukraine into Russia from the Russian perspective. And that could affect all the commodities Ukraine exports. We might see the destruction of Ukrainian agriculture in the coming years. We are going to have the wheat plantings that will probably come in 30% below last year, 30% below normal. So when we look at wheat, certainly there are reasons to expect quite a bit of support. Also, when we look at corn, we still have La Nina. We had a situation in Ukraine plus La Nina potentially affecting South American summer crops, quite a bit of corn, but also soybeans. That might be affected or not. We just don't know yet. Okay. So some commodities will remain supported, but everything that is a luxury item will suffer.
But would you say that the worst in sense of price rise is behind us? And what's your sense on when do we see the demand picking up? I mean, this is part A and part 2 of the same story.
I think the demand side is going to be affected. I think we're going to see more pain, and this is part of the macroeconomic story. We need to, go through the winter in the northern hemisphere, especially in Europe. And then we will see probably demand recovering a little bit, but that will also depend on the war and energy prices going forward, all very uncertain.
So, Carlos, if you were to invest, if you were to advise an investment in any of the soft commodities right now, or on long or a short side, where is more conviction coming in right now?
Well, I cannot give advice, but I can tell you the trend seems to be that everything that can suffer in a recession will be shorted. And I think that trend might continue for a little bit. I think cocoa bean prices might continue to suffer, for example. I believe coffee prices can also go down because weather in Brazil, even though we might have a La Nina effect, the coffee belt is a little bit further north, might not be affected, and that means next year production could recover. But certainly when it comes to grains and oilseeds, I will expect a little bit more support And when it comes to palm oil, as you mentioned, it's about 50% below the peaks seen earlier in the year. It's very hard to give a price outlook. We think it's more or less neutral, but volatility is very much guaranteed.
Okay.
Okay, all right, Carlos, as well as Benisha, thanks very much for joining in and taking us through that conversation on the commodity space. With that, it's also a wrap on Halftime Report Business Lunch just after a short break. Thanks for watching.